Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be sharing with you 3 things that makes the SDi stop loss model very powerful. Right now guys, this SDi stop loss model has been able to help me pass my phase 1 challenge. So let me actually share with you what I have learned so far that has made the SDi stop loss model very powerful. Now the first thing guys is going to be your area of interest, which is going to be this white lines here, right? And then the second thing guys is going to be your liquidity, right? As you can see, we do have liquidity here, we have liquidity here, and then we also have liquidity here. And then the last thing guys is going to be the way you enter your trade, so what specific entries that you have, right? Now when it comes to actually tying everything together guys, what I'm going to do is I'm going to actually start from beginning, which is going to be the start of the week, which was basically right here. Now guys, when price actually was right here, the way my area of interest worked was very simple, right? So if I delete this, actually if I go back all the way to a new chart, you're going to see that if we stick to the 1 hour time frame here, you're going to notice that we had this area of interest right here, boom, right? So this is going to be a very technical video. So we had this area of interest right here, right? And then we also had this area of interest right here at the start of the week, boom, right? And as you can see, this area of interest extended all the way to the left. So you see how important this area of interest is. So this was basically the start of the week, and then price actually started off giving us our first entry right here. So if you notice guys, when it comes to understanding how the SDi stop loss model works, right, is the first step is wait for price to reach your area of interest. Now once that has happened, we then now wait for liquidity to now present itself. So in this case here, liquidity is now going to be the doji candle in this case, right? So that's how we identify liquidity, right, using a doji candle. So we mark this doji candle up right here, boom. Now once we color it guys, the next step is now to wait for your entry. So in this case here guys, what makes the stop loss, SDi model so powerful is guys, you really just need only 2 types, or like 2 chances to really make a good trade, right? So in this case here guys, price actually gave us this entry first here by giving us this shooting star. So imagine if we took a sell right here, and then our stop loss was basically above this doji box right there. Now because liquidity has not been taken out yet, right, price might still stop you out. So in this case here, if we fast forward real quick, you're going to see that price did end up stopping you out here. But guess what guys, literally in that same stop out, right, we still get an entry right there. So now our first entry was right there, boom, stop loss right there. So this would be like a 29 pip stop loss. Now because we got stopped out, that's probably like a 1%, right? But then we now get this entry right here, boom. Now this is now a much more smaller stop loss we're using. And now imagine if we did place our trade right there, sell, stop loss just right above that candle, right? Because the entry we're now waiting for is now the shooting star. So right, I always use the shooting star as my entry. In this case here, price give us the shooting star right here, and then our next target, right? Now if we look, we always target area of interest. Now in this case here, we did have this area of interest right here, boom, right? So this was the area of interest we had here, and then notice how price reacted from this, right? So as you can see, I actually did have my buy here and my sell here. Price came to that area of interest, reacted, took me out, and then I entered again, boom, and now play the market. As you can see, price sold off. Now notice again, price did go into a drawdown right there on this candle. So imagine if you had actually entered from this end again. So now this would be a much more tighter stop loss, right? So in this case here, price came to this area right here. Now notice what price is doing on this level here. Notice that the language is speaking is still not reversals, right? Because whenever we look for reversals, right, price needs to have like a really big shooting star in this case. So when it comes to reversals, we always look for something like this, like a really big shooting star, like a small wick, you know what I mean? So something like this. Now we can actually have a long wick, but like the top needs to be like no wicks, like little to no wicks, like you can literally barely see the wick essentially, right? But in this case, I noticed that price did not give us any what will I call this, entry to sell, to buy actually, right? So if we fast forward this a little bit, you can see that, okay, boom, price now finally sold here. Now where can we enter our next trade, you're going to notice that price now actually still bought up, right? Boom. As you can see, price still bought up here and then gave this kind of entry here. So if you notice, guys, like when it comes to area of interest, right, you still have to like watch out for this like little area of interest, right? Like you see this area here, you see what I mean? Like this little area of interest, or if anything, you can actually even take your trade from here too. But the point is, guys, this little area of interest here, like if I mark this up like this, you can see, right? Now you might ask yourself like, oh, like how do we know this is going to be an area of interest? It's very simple, guys. Like just watch for the price action that it gives you, right? So in this case here, guys, like if you notice, like I told you guys, the SDi stop loss model, right, has to have the area of interest, the doji candle, and then an entry, right, in the doji candle. So in this case here, guys, like literally when price was here, right, boom, right, this was like a shooting star. Now in your head, you're going to be thinking, okay, cool, this is like a really good entry, but it's not still in our area of interest. But if you notice, price did react off here, right? So in this case, since price reacted off here, just look to the left and see, okay, is there a reason why I want to, like, you know what I mean, like, you know what I mean, change this area of interest here? Because if you notice, price still kind of disrespected this area of interest here. So I can actually even delete this, to be honest with you, right? Because price kind of disrespected it. So in this case here, price now retraced to this area and gave this entry. And then notice again, this was also a doji candle here, right? This is a doji candle here, doji candle here, doji candles, right? So this would basically be another SDi stop loss model in this case here. Boom, like that. And as you can see, price now gave us this entry. So if we had sold here, stop loss above the doji, boom, it's been a good sell, right? So something like this would have been a good sell. Now notice now our TP is now this next area of interest. Now notice the language this area of interest is telling us right now. The language is, it gave us a shooting star, gave us another shooting star, gave us another shooting star again. So now these three patterns right here is an evening star essentially, right? So that's basically what makes the reversal really, really concrete, because those three evening star candles are all shooting stars, right? So that makes it a really strong reversal. And in this case, as you can see, price did give another like big shooting star here. Now in this case here, guys, if you notice, price did not really give us our entry that we're looking for here. Why? Because there was no doji candles anywhere here. Like if you notice, there was no doji candles here. Besides here, there was a doji candle here, but like still there was no like doji candle in this area here, right? So unless you can say there was a doji candle here, and then you would have actually done this, boom, because this was close to our area of interest. And then since price now took out that angle, then you'd have taken the game. But as you can see, price still took it out here. But at the end of the day, guys, like price still, you know what I mean, gave you another SDi stop loss model within this price action right here. In the case of price, give you this doji candle like that, give you doji candle like that, boom, and then this was like your entry, quote unquote, right? And then this was your entry, you have taken your buy right there, and then stop loss below the box, and then target a 1 to 2 risk to reward, something like that. So in this case, you actually did get stopped out, if I believe, right? But that's for a different reason. So if you notice, guys, price came, boom, okay, you actually did get stopped out. So notice again, you did get stopped out here, but still, guess what? Price still gave you much more better entry. So in this case here, if you notice, you get stopped out here, boom, price now gives you another doji candle here, right? So if you wait for your SDi stop loss model, it always shows, right? So boom, price gave you this doji candle here, right? And then when price gives you that doji candle, you wait for your entry. In this case, price never gave you any entries until this right here. This was your entry right here, boom, right? So you then now take your buys, boom, stop loss right there. But if you want to be lucky, I guess you could put your stop loss right there, but I do want to, you know, emphasize to put your stop loss below, you know, the actual candle. And then boom, price now gives you a really nice 1 to 3 or 1 to 6 or whatever in this case here. So if you fast forward, price does climb. Oh, it does hit our stop loss. Oh, okay, so it did hit our stop loss again. But if you notice, price still gave us a nice 1 to 4 risk to reward, right? So price still did end up hitting our stop loss. But guys, oh, what I actually forgot to mention was this. So if we actually, you know what I mean, zoom all the way up here, boom, right? If we zoom all the way up here, right, you're gonna notice also that like there's also like another area of interest here, boom. You know, if you remember, this area of interest was here too. So there's also another area of interest right here, boom, something like this, right? If you remember, like I think our area of interest was like somewhere here, right? Because price was disrespectful. So if we kind of like reduce it to somewhere around here, it makes it a little bit better. Or if anything, we can actually forget this level and kind of like do it this way in a sense. So if we do this, accommodate this, and then reduce this like this, something like this could be our area of interest in this case. As you can see, price was buying along this level. So if anything, would have actually taken our TP right there. So that's why you actually have to always be focused, right, and actually watch price action in this case here, right? So in this case, boom, this was basically the move that happened. And then if you notice again, guys, like literally notice again, if we go to the daily time frame, you're going to notice that price actually did something here. So in the daily time frame, price actually gave us this doji candle right here. Sorry, this doji candle right here. So this is like a sign of liquidity in this case here, right? Boom, this was a sign of liquidity here. And then if we go to the 1 hour time frame, price did the same thing to then now take out the lows, right? So what I'm going to do is I'm going to like go to the daily time frame again, and then I mark that liquidity area just to show you what happened. So in this case, boom, this was the liquidity zone right there, right, like that. And then price now took it out. So if we go to the, and also this was another liquidity zone here again. So in this case, same thing, boom, go to the 1 hour time frame. Cool, yeah, so if we go to the 1 hour time frame now, you're going to see that there was liquidity here, right? And then obviously the trend is still sells. Why? Because this was the high that price needs to break for the trend to change from, you know, sells to buys, because as you can see, price was, you know, bullish at some point, right? It now reached this high, but when it created this high, this was the low. The price needs to break for the trend to change from buys to sells. As you can see, it broke that, closed below, and then once it did that, retraced up, same thing again, went back down, and I started doing this. So in this case here, right, like when price now went all the way down here, or even here, right, the high that price needs to break is still going to be this high, because this high here has at least 2 buy candles. Now this high here doesn't have at least 2 buy candles, only one. This high here, however, has 2 buy candles, but it's not like back to back, right? So the 2 buy candles has to be back to back and consecutively, right? So back to back and consecutively, essentially. So that's what makes this high the valid high for the high that price needs to break for the trend to change from sells to buys. You feel me? So that's basically what we have right there. So that's why we are essentially looking for sells right at this area of interest. So in this case here, we'll wait for another SDi stop loss model. So if you fast forward, you're going to see that price now came again, gave kind of like, I wouldn't say like an SDi stop loss model, but still it kind of gave like a mini entry kind of thing. Like it gave this shooting star entry here, but still, if you had gone down, notice now price now, if you notice, price now came and took out these lows here in the daily time frame, right? So basically this sell that happened here on GBP was because price was looking to take liquidity from the daily time frame, right? So in this case here, if you notice, there's actually another area of interest here again, right? So if you do this, you can see from this level here, you can clearly see from this level, boom, right? This is kind of like the area of interest we're looking at from that level, like that. As you can see, boom, price came, took out the liquidity. So in this case here, there was like so many like area of interest close to each other, but at the end of the day, that's forex, right? So boom, if we delete this, you're going to see now price took out the liquidity and bought up, right? So you'd have taken your trade right from here around the New York session, and now we're looking to then now take the highs of the daily time frame. So in this case here, price might actually be looking to break this high right here. So if I zoom in, so in this case here, price might actually be able to, or want to actually break these highs right here on the daily time frame. All right, so boom, like that, and then there's obviously liquidity above. And if we go to the 1 hour time frame, you can see that our price is looking to target these highs. So if I delete this, you're going to see now our price is looking to target these highs, as you can see. Boom. So if I do this now, I do this, boom, boom. Then if I fast forward, you're going to see now, so price now came up here, right? It kind of gave you like an entry. Let me see if it gave you an entry, because price is still selling. So it never gave you like a really good SDi stop loss model entry here. So it would actually continue like this. As you can see, price is literally right here right now. Let's see. Cool. So this is basically where price is at right now. So if you notice, right, price recently just crossed, you know what I mean, below a doji candle. So if I was to go to my original markup, I'm gonna see that I actually had this markup here. So like I told you guys, price is looking to take out this high over here. So if that's the case, we're looking for buy setups for now. Then this is like basically an SDi stop loss model here. Boom, price takes out the liquidity here. It goes, test this area here. We can actually even move this area of interest a little bit closer, right? As long as it's still, you know what I mean, generally following the whole structure of things. So for example, from here, then I can actually reduce it, something like this, because it still follows the whole structure of things here. Boom, like that. So as you can see, boom, price has touched it. So now we're looking for an entry in this case here. So let's assume price was to close literally like this, right? We can actually take an entry right there. Boom, place a buy like that, and then stop loss below the candle, then TP, literally targeting the highs there. Now obviously, you know, in terms of this specific entry, let's see how it plays out, because I would definitely love to enter, right? But yeah guys, if you guys want more in-depth knowledge, guys, subscribe to my channel, you feel me? But yeah guys, this is basically how you would be able to make the SDi stop loss model much more powerful by using these 3 strategies I've given out to you guys: the area of interest, liquidity, and also the type of entry that you use, right? So the entry that I use is called the shooting star entry. Well yeah guys, this is basically the whole video. I hope you gained a lot from this. I will see you guys in a different video. Peace.